What's going on, people? It's GBP baby. It's currently 12:15 at midnight, Thursday the 8th of June 2023. Welcome to another video. Hello to my new subscribers. Thank you everyone who joined my Discord. You know how it goes. We're going to be looking at GBP. You know how it goes. And yeah, so today's price action, well, Wednesday's price action, it was not exactly what I was expecting, but it's okay because we're all learning here. And it's good to take a look at why it didn't do as I expected. So you can see that we traded aggressively higher and reached into this fair value gap, which is actually something I had marked out at the beginning of the week. So I was expecting this gap to get traded to on Tuesday, and then when we made this high on Tuesday, I was like, okay, it's probably going to leave it. But in all fairness, this high getting made here is what creates the buy side liquidity. So for price to run up like this on a Wednesday, take out the liquidity and then move down, I mean, again, this is something, when it comes to anticipation, this is something that we're just going to have to learn over time. But it was very interesting to see that happened. So yeah, we can see that we traded up. This is a daily fair value gap, by the way. No, a 4-hour fair value gap. This is a 4-hour fair value gap. You can see that the volume of price stayed below the 50% level, showing bearish nature. So although we traded into it, we can see that we're still quite bearish, and we actually traded back through the actual order block. Let me say that again. We've traded back down through the block that traded into it. So we traded up, wicked, hit the 75% level off the total range that we're currently trading in, and then we traded back down, creating a bearish order block here. And you can see that price stayed, actually I want to keep that up, price stayed below the 50% level and the 25% level off the range. So when price stays below that level, it shows bearishness. So ICT explains a lot about this in his, I think there's a video on fair value gaps specifically, but he explains how you should grade fair value gaps into quarters, which is what I'm doing here. So we've got first quarter, second quarter, third quarter, and then fourth quarter would be there. And you can see how volume traded to the first quarter and then turned around. When price trades to the first quarter like that, it shows bearishness because it's not willing to even try and reach up here. Yes, we wicked through it, but volume clearly remained below the first quarter, showing a bearish nature. So although we did wick up there, my bias still stands as being bearish, which is hard to believe in environments like this, but you know. And yeah, so we'll drop down to the 1 hour, take a better look, and you can see that we found support, wicked up, and then traded straight back through it. So once price closed below this, we have a break in market structure, meaning that price now should not necessarily trade above this. So when price closes below a swing low and it breaks market structure, price shouldn't trade back above it. Yes, we can wick up there, and yes, there's a fair value gap resting there, but generally speaking, I'm not expecting price to want to return back up here. So I'm going to draw this out because I want to see this act as resistance now. You can see that we're finding a lot of consolidation back in this 4-hour bearish order block that I marked out on yesterday's video. And you can see how price is treating this 50% level. So volume staying below it. We've traded into this 4-hour inverted fair value gap. And now we've traded through this fair value gap on the downside, upside, downside, upside, downside. And we've just wicked into it again. So I do want to continue to see it act as resistance because I do want the price to start pushing down lower. Now, you can clearly see that we're in a massive consolidation in this complete range. This is why I marked out this range specifically. So from this high to this low, this is a consolidation because we're trapped within this range. I can imagine that's because FOMC is next week, which is obviously interest rates announcements, which is very big for the economy, etc. So I am expecting some kind of expansion on the downside to be happening next week. I can imagine that we'll probably stay within this range for the rest of the week. I did state this in my weekly review on Sunday. I was saying I'm not expecting price to leave this range because, again, with interest rate announcements next week, it's very rare for price to want to do too much movement, considering that's what's going to be driving the market. So my expectations for tomorrow, Thursday, I would like to see us trade a bit higher, find some resistance. Again, this fair value gap's looking nice, and you can see that this level I have marked out here, I'm going to make it a bit thicker. This red one, but let's make it a different color. This orange one, this is the Sunday opening, so I do want to see price return back to it one more time before leaving it and trading lower. So I'm going to keep my eyes out for this. That's where I'd be looking for sales. In general, this order block is where I'm looking for sales because you can see our price is stopping here. We find resistance. It's consolidating, which means it's fair value. So I'm not really expecting much to go on. But once price leaves this, I've got my eyes on sell side liquidity resting here, sell side and here, and then obviously down here. But as I said previously, I'm not expecting price to actually leave the complete range that we're trading in. That's pretty much everything today, guys. It was nice to see a lot of action today. As you can see, from London we traded right up, filled in the fair value gap completely, and then left it. So now this is a fairly traded range, which is why I want to see price start to trade down and push into these relative equal lows that we have resting here and here. So any highs that are made tomorrow during London or around that time anyway in general, like say we trade back to the Sunday opening level, which is this orange mark delineated, I'd like to be looking for any kind of sales. Furthermore, it's important to notice how price is treating that Sunday opening. So you can see how price didn't spend long above it at all. So this whole week, let me see if I can make it more clear. Bear with me. Right, so this green line, when price wicks above it, you can see it leaves it. We traded above it again today, and we left it again. So this is the Sunday opening. So I'm imagining this is going to be the high of the week. It's possible the low of the week has already been created, considering I'm expecting us to be consolidated. But regardless, you can see how price isn't wanting to spend much time up there. Also, the Sunday opening is right below the 50% level of the entire range we're trading in. So when you see price not wanting to spend long in the upper quarter, the upper half of the range, again, it shows bearishness. It offered a premium and then it left it straight away, meaning that we're likely to be wanting to look for lower prices. Hence, my expectation for lower prices still, even after trading aggressively into this fair value gap. One more thing as well. This is the Dixie daily. You can see how Dixie, we're clearly consolidated on Dixie, and you can see all these wicks, and we're actually staying above the 50% level of the range that we're trading in. I'll show you what I mean. So you can see how we traded down and then traded back up, traded above, and now volume is staying above this 50% level of this range. So to me, it's looking as though Dixie has found some kind of support, especially in this fair value gap specifically, and then we've traded down to this order block, meaning that Dixie is showing strength, which means that which is what's adding to my reason for expecting low prices on pound. So yeah, it's looking at both Dixie and GBP in this scenario. Obviously, we're very consolidated right now, so in general, you could say it could go either way. And I know I hate to say that like that, but when it comes to environments like this, it's so choppy that it's clearly just more macro factors which are affecting price right now. So you can see how we dipped down, traded above, found support on the fair value gap, found support again, although we traded into it. We wicked away. So this is all pointing to higher prices for dollar, meaning that GBP should have more ease running down into these stops. So it's important to take that into consideration in our analysis. But obviously we'll see, and remember, next week is FOMC, so this kind of consolidating from dollar is nothing new when it comes to having FOMC and such events in the lineup for next week. But yeah, that's pretty much everything, guys. This has been GBP Baby. Thank you for watching. I'll catch you tomorrow. Don't forget to check out the Discord. We've got a few people in there now. And yeah, I'd say keep an eye out on this Sunday opening line, see how we treat that. And then I'd be looking for sales, especially this swing low that is created here, this swing low and this swing low. This is creating relative equal lows in general. So I can imagine price is going to want to rush to that, especially after trading into here and collecting a lot of buy stops. Thanks for watching, guys, and I'll catch you in the next one. Peace.